Let's talk about the e-signatures business, what has been driving it, and what you expect will continue to do so this year. Tell us about it.
Absolutely, John. If you think about e-signature, which is, of course, what put DocuSign on the map, it has been significantly accelerating through 2020 and into the beginning of 2021, partially due to, as you said, some of the COVID issues where people took their digital transformation and they accelerated it. So we definitely have benefited from that. But we think it's a small part of that are the truly short-term components related to the pandemic, and more, it's just a change where people are realizing that they need to have a more digitally transformed business. So our expectation is that we're going to continue to see the significant growth that we saw in 2020 continuing very strongly into 2021.
Now, I believe you said in your last earnings call that your enterprise and commercial customer count grew 64% year over year, which is a huge number. Yeah. How should investors expect that number to continue going forward based on investments that either you're making in Salesforce or other means that you're going through to increase your exposure to enterprise and commercial?
Well, we are absolutely investing for growth. And as we said, since we went public a couple of years ago, well, of course, we want to be responsible in our growth. And that's why you see our profitability increasing each quarter. We also want to focus on growth first. And so I think we're going to continue to make those investments. I think the new customer ads you mentioned is a good metric. I think looking at the billings growth, and 63% was the billings growth for the last quarter, 61% before that, those are heightened levels, right? We're definitely seeing that. You're going to see us continue to really invest to hit that apex of that growth opportunity. And part of the reason we're so excited about investing aggressively for that growth opportunity is that we see this phenomenon of we were a signature company, which is fantastic, and we're thrilled about the signature business. But now we have a broader agreement cloud opportunity, which takes the TAM from about $25 billion to almost double that. And so we actually look at that and say there's a tremendous amount of runway ahead of us to continue to invest aggressively. Sales and marketing will be a component of it, but we're a software company. You're going to see us continue to put a lot of resources into building fantastic new software, as well as considering M&A opportunities when we see them to expand the product footprint that way.
Dan, talk a little bit more about that agreement cloud opportunity. I know you guys are an early adopter of blockchain. So what other applications could that open you up to, sort of in layman's term? Does that mean that we could see DocuSign move into areas like e-commerce or digital payments?
Yeah, I think what you'll see with DocuSign is we're pretty focused on customer success. And for us, we're a B2B software company. So I think where you'll see us is continuing to provide what our customers are asking us for. And if you think about our traditional business, which had been e-signature, a lot of our customers said, this is fantastic, but we also need help before the signature, preparing agreements so they can be routed around and ready to sign. And then we need to manage that set of agreements, what sometimes people call CLM, or customer lifecycle marketing construct. And we really want to get into the managing the agreements across that entire life cycle. So I think that's where you'll see us more investing in preparing agreements and then managing those agreements afterwards.
Okay, got it. And Dan, you mentioned that you guys are open to M&A opportunity. I wonder, sort of, are you actively looking, and do the valuation, especially in the enterprise cloud software space, do they worry you?
Yeah, I mean, I think the valuations are at levels we hadn't seen before in the software space, and that's both true for DocuSign as probably well as true for companies we might consider acquiring. I don't think we're a company that's been focused on trying to do big blockbuster deals or growth through M&A, but rather thinking about M&A strategically as a way to add functionality into that overall suite that our customers are going to ask us for going forward. So I think you'll continue to see the kind of deals we've done, in the last couple of years. Spring CM was a great example, really enhancing our CLM capability, or thinking about Seal software, where we took our advanced analytics to a whole nother level, as customers are increasingly saying, we need that advanced analytics capability and artificial intelligence to think about running our agreement cloud better. So that's what I would look for in terms of incremental things that you'll see us doing in M&A.
Shepard Smith here. Thanks for watching CNBC on YouTube.